Hello, and welcome to Forex JumpStart, your crash course of the Forex market. Chapter 1, Introduction to the Forex Market, Fundamental Analysis. When trading currencies, it is important to note every trade placed in the foreign exchange market involves two currencies, found in a pair. When we buy a currency pair, we buy the first currency within a pair and simultaneously sell short the second currency within that pair. For example, if we were to buy one contract euro-dollar, we would actually buy the euro and sell short the US dollar. Now how do we make money? We buy a currency we expect to appreciate or rise in value and sell short a currency we expect to depreciate or fall in value. For example, if we were to open a trade and buying one euro-dollar at 1.4500 and close a trade at 1.4600, the net result would be 100 pips of profit, or 1 penny. The 8 currencies we trade are as follows: the US dollar, the Japanese yen, the euro, the British pound, Swiss franc, Australian dollar, New Zealand dollar, Canadian dollar. Now we should take a step back and look at the fundamental forces which move the Forex market. The number one driver of the foreign exchange market is the anticipation of future interest rates. Central banks determine interest rates and set these interest rates around the world, and they watch economic indicators as well as the commodity markets such as crude oil, gold, and other metals can also move the foreign exchange market. In addition, any unexpected geopolitical event may trump all fundamental forces. What are the key economic numbers to watch? Central bank meetings, non-farm payroll, tick data, IFO data, Humphrey-Hawkins testimony, consumer price index, producer price index, Philly Fed, the zoo, and the Tankin. Each nation or group of nations has their own central bank, which sets and adjusts that respective economy's interest rates. Interest rates are raised to control the risk of inflation. Interest rates are lowered to stimulate a slowing economy that shows a risk of a slowdown or recession. The central banks of our 8 currencies are as follows. In the US, the FOMC, Federal Open Market Committee. In the Eurozone, European Central Bank. In the UK, Bank of England. In Japan, the Bank of Japan. In Canada, the Bank of Canada. In Australia, the Reserve Bank of Australia. New Zealand, Reserve Bank of New Zealand. And the Swiss franc is governed by the Swiss National Bank. Non-farm payrolls, released on the first Friday of every month by the Bureau of Labor Statistics. It provides the unemployment rate, number of non-farm payrolls, average work week, and average hourly earnings. Now it's watched very closely during election years because employment becomes a very popular issue to discuss. It's considered one of the most timely and broadest indicators of economic activity. The TIC, or Treasury International Capital Systems figure, is released on the 11th business day of each month, measures trade flow and capital flow in and out of a particular currency and country. Reporting system that is responsible for tracking international capital movements and investments. Information is collected from commercial banks, broker-dealers, as well as financial institutions. The IFO, conducted monthly, asks around 7,000 companies throughout Germany 2 specific questions. How is business performing right now? How is business expected to perform over the next 6 months? Now, the monthly business survey is one of the main surveys enterprises of manufacturing, construction, retailing, and wholesale. The survey results published monthly by the European Commission and indicate the economic prosperity of the Eurozone. The Humphrey-Hawkins testimony meets every February and July to discuss monetary policy. The financial markets take great interest in the Federal Reserve Chairman's Humphrey-Hawkins address, looking to it for hints about the future of Federal Reserve policy. The Federal Reserve considers 6 basic goals in the Humphrey-Hawkins testimony: economic growth, high unemployment, price stability, interest rate stability, stability in the financial markets, as well as foreign exchange markets. The CPI, or Consumer Price Index, also released on a monthly basis, is also known as a cost of living index. It's an inflationary indicator that measures a change in cost of the fixed bag of products and services, including housing, electricity, food, and transportation. Over time, as the cost of goods and services increase, the value of the dollar is going to fall because a person won't be able to purchase as much with a dollar as they previously could. Now the Producer Price Index, PPI, is also updated on a monthly basis. It's a government index that measures prices of goods, this time at the wholesale level. The market tracks the finished goods index most closely as it represents prices for goods that are ready for sale to the end user. At all stages of production, the market places more emphasis on the core rate, the PPI excluding food and energy. Food and energy prices tend to be quite volatile and obscure trends in the underlying inflation rate. The Philly Fed, released every month, is an index based on one of several regional manufacturing reports released monthly. The National Association of Purchasing Managers NAPM Index, 50% marks the break-even line between expanding and contracting manufacturing sector. The Philly Fed survey can be of some help in forecasting the national NAPM due to its timeliness and the fact that this region represents a reasonable cross-section of the national manufacturing activities. Now the ZOO, released on a monthly basis, is an economic sentiment survey and measures European investor confidence. Compiled by the ZOO Research Institute, based on the survey of analysts and institutional investors, it gauges simply the overall consensus and expectations of future Eurozone economic performance. The Tankan, conducted quarterly in March, June, September, and December, is a survey conducted to provide an accurate picture of business trends of enterprises in Japan, measures the economic sentiment to the various Japanese businesses in regards to the following topics: employment conditions, business conditions, supply and demand conditions for products and services, lending attitude of financial institutions, overseas supply and demand conditions for products. In regards to commodities, they can have a severe impact on the foreign exchange market as well. For example, oil benefits Canada as Canada is the #1 supplier of crude oil to the U.S. It does place pressure on industrialized economies such as the U.S., Europe, and Japan, which rely on oil. Gold and other precious metals can benefit the Swiss franc, the Australian dollar, and the New Zealand dollar, and it acts as a natural hedge to the U.S. dollar and sometimes to inflation. In addition, significant expected and unexpected geopolitical events can change a trend in the Forex market, such as elections, national strikes, embargoes, or wartime activity. With that said, it is important when trading currencies to note the fundamental forces which move the foreign exchange market, such as the anticipation of higher or lower rates, the economic indicators that the central banks watch in order to determine interest rates, the prices of gold, crude oil, and other precious commodities, as well as expected and unexpected events around the world which may shape our foreign exchange market. I thank you for joining us, and we wish you the best of luck in trading.